India has once again tightened its grip on gold and silver imports, announcing a sharp increase in import duty that is from 6% to 15%, with effect from May 13, 2026, that is today. Notably, the decision notified by the Finance Ministry and Revenue Department under the Customs Act is being seen as a major economic step that is aimed at reducing pressure on the country's foreign exchange reserves and controlling the widening current account deficit. And under the revised structure, notably, the government has imposed a 10% basic customs duty along with a 5% agriculture infrastructure and development cess, that is also known as AIDC, on imports of gold and silver. And the same higher duty structure will also apply to platinum, jewelry findings and precious metal related industrial goods. The move comes just days after Prime Minister Narendra Modi made an unusual public appeal, asking citizens to avoid buying gold for 1 year in the national interest. Referring to the pressure on India's foreign reserves, amid the ongoing West Asia conflict, the Prime Minister urged the people to conserve foreign exchange by reducing gold consumption. India imports nearly all of its gold requirements from abroad, making the precious metal one of the country's largest import expenses after crude oil. And according to the official trade data, India's gold imports surged by over 24% in the financial year 2025-2026, touching a record that is $71.98 billion. And this was significantly higher than the $58 billion recorded in financial year 2025. Gold alone accounted for nearly 9% of India's total imports. Switzerland remained the largest supplier with around 40% share, followed by the United Arab Emirates and South Africa respectively. The government believes that reducing gold imports could help stabilize the rupee and ease pressure on the country's foreign exchange reserves, especially at a time when the rupee recently touched an all-time low of 95.50 against the US dollar. The revised duty structure is expected to make gold, silver and platinum significantly more expensive in the domestic market. Industry experts say that the higher import cost will directly translate into increased retail prices, particularly during the ongoing wedding and festive season when demand traditionally rises across India. Gold continues to hold strong emotional, cultural and investment value among Indian buyers, especially in rural and middle-class households. The government has also withdrawn concessional import duty benefits previously available under the UAE quota system. In addition, customs duties on jewelry findings such as hooks, clasps, clamps, pins and screw bags used in jewelry manufacturing have also been revised. Gold and silver jewelry components will now attract a 5% customs duty, while platinum components will face a 5.4% duty, and the notification further includes changes in concessional duty provisions for the import of used catalyst, an ash containing precious metals that is meant for recovery and recycling purposes. While the government sees the move as necessary to control imports and support the economy, industry bodies have expressed concern over its possible side effects. Bullion traders and jewelers warn that the sharp hike in duty could hurt demand at a time when gold prices are already at elevated levels globally. Surendra Mehta of the India Bullion and Jewelers Association stated that although the decision may help reduce the current account deficit, it could also negatively impact the jewelry industry and overall consumer demand. And another major concern being raised is the possible return of large-scale gold smuggling. Industry officials say that smuggling had reduced considerably after the government lowered duties in 2024. But the latest increase may once again make illegal imports profitable. And according to the bullion dealers, the difference between international and domestic prices could now create strong incentives for grey market operators. And the impact of the government's announcement was immediately visible in the stock market, as jewelry company shares witnessed sharp declines. And stocks of Kalyan Jewelers and Senco Gold reportedly fell by nearly 10%, while Titan, PN Gadkal and Thangamile Jewelry also saw significant losses after investors reacted to fears of weaker consumer demand. And India had already imposed a 3% integrated GST on gold and silver imports in recent weeks, causing banks to temporarily halt the imports. And as a result, April gold imports reportedly dropped to their lowest level in nearly 30 years. Although banks later resumed imports, analysts now expect another slowdown following the latest tariff hike. Overall, the government's decision signals a strong attempt to reduce dependence on gold imports and protect India's economic stability, even if it comes at the cost of higher prices and weaker demand in the short term. That's all for now. Stay tuned to the Savera for more updates. Do like, comment and subscribe to the channel.